Good morning. Okay. Uh, I have not done one of these videos in a long time. Actually, I think today this might be the first video that I'm doing for the year 2026. I have promised to do a few of these videos on a weekly basis, but things just got busy. I just got busy and just didn't find the time to do these videos. So anyway, I'm trying to start back. All right, today I just want to go over something short and sweet. I want to do a review of the high tide flag setup. And for those of you who are not familiar, these different basin patterns were familiarized by, in my opinion, one of the greatest equities trader to ever live, William J. O'Neill. And all of these patterns were documented in his best-selling book, How to Make Money in Stocks. And the high tide flag, this is just one of them. This is probably one of the most explosive setup charting pattern that William O'Neill has discovered. And pretty much the basis of this charting pattern, the basis of this setup is you are looking for a stock, a growth stock, a stock that's in its growth phase, meaning that the earnings and sales are growing exponentially. And as you can see from this earnings and sales table at the bottom, you can see that these sales and earnings are just out of this world. I mean, you have some triple digits earnings and high double digit sales for the last 3-4 quarters. So there's something really exciting going on here. Hence, you see this massive move. Let me just do this. So you have this stock has been basing pretty much for let's see, from last August, and finally broke out in April. So it has been consolidating right under this $20 level, putting its head up several times, just can't break it. And then once it had got the right catalyst and all of that demand come in and the supply has been pretty much dried up over the last year or so, then the path of least resistance is just higher, and hence that's why you see this rapid move in such a short space of time. So what you're looking for is a stock that has advanced by about 100% in a very quick period. Now, what's quick? That could be a month, 2 months, 3 months, sometimes even less, right? As we can see with this one, let's see how far. Let's use our measurement tool and see what this one did. So this one moved. So this one broke out in April, early in April, and this was a massive 380% move in 25 bars. So in 25 trading days, this stock went up 380%. And then it pretty much held most of its gains, so it never really pulled back. So we had a move from $20 up to $104, and the biggest retracement took this stock back down to $67. So pretty much there was very little selling, and that's what you want to see if you're looking for a high tide flag setup. Massive move, preferably over 100%, the higher the better, and you want to see a tight consolidation. Stock just moving sideways over the next 2, 3, 4 week period, and then you're looking for this thing to break above that consolidation and continue its move higher. So what I did, I drew a trend line so that I could get an early entry into this stock. I don't like the traditional William O'Neill pivot on this name will be to enter as it break this level. 1 second. So to enter as it break this level. Let me just fix this. So this is let's just do this. So this will be your buy point. Your traditional buy point will be as a break, one or four. But the way I trade is I always like to look for these lower entries so that I can start building a position and accumulate some sort of a cushion. So then, if this breakout fail, then my losses are going to be pretty much contained. So I'm trying to anticipate these moves, and once they're being confirmed, then maybe I can add a little bit more and hopefully ride these moves higher. As we could see, this one broke out on 5 days ago, and so it took out my trend line here at 86.98, and within 2 days, this thing was up at 128 on pretty good volume as well. So you can see the volume coming in as this thing broke this descending trend line, and that's why William Neal, study these setups because they can be very, very powerful. Because this represents a stock that is in high demand. Investors can't get enough, and they're being forced pretty much to buy at higher prices. So every time this thing comes into one of these shorter term moving averages, it just find buyers, and then go back up and find buyers, and it keeps getting tight, and then once that coil has reached to a point where it can't get tighter anymore, then you have a massive break up to the upside. Now this could have also failed and broke to the downside. Actually, this is a failed breakout. So in 2 days we had a move from 196 up to, from 96 to 128, and then what happened? Bam bam. So it's very important that when you take in these types of setups that you understand risk management really well. These are not the types of names that you get involved in and I'm going to hold this until whenever I'm going to look for a double or triple or whatever. Because when they fail, and they do fail, when they fail, they can fail just as spectacularly as they move up, right? So there you go. You had a nice breakout, high type flag, confirming volume, and then within 2 days, you gave it all back. Unfortunately for me, I missed this trade because I had this on my watch list and my focus list right in this area, but I thought I lost it right here. I thought, okay, it got away. I didn't want to chase it up because, it had just moved from 83 up to 98 in 2 days. I was like, nah. Because now my natural stop is 83. I don't want to risk $15 in a $100 stock. That doesn't make any sense to me. So, and then it came back in, and then I missed it there again. I hesitated. So, I never got involved in this name, but I know a lot of people, a lot of really good swing traders did. But most of them, they had to spit it back up because it just didn't work. And some of these things they don't work sometimes, but when they do, this is something that could have easily run up another 50% in a very short order, and maybe even higher as well. Now, is it done? I don't think so. If we look at these moving averages here, we have a 50-period moving average that's upward sloping. That's a positive. We have a 21-period moving average that's upward sloping and just start beginning to flatten out. That's also a positive. So I think that if this stock comes down and finds some support at the 50 period and go sideways for a little while, I think we can see a resumption in this uptrend, and this may well be a fake out that leads to a really massive up move. But all of that is going to be dependent on what the overall market decides to do within the next 2 or 3 weeks. By the look of things, it seems as if we're going through a lot of distribution right now. So, and this stock is in the semiconductor fabless sector. So, these names are being heavily distributed right now. Investors have made a whole lot of money, writing these things up. And I think right now, it's just a matter of them locking in some profits and probably doing some rotating into less growthy stuff. Probably getting back into some of these Max 7 names over the summer while things digest, and then they think about how they're gonna play the end of the year. So yeah, so that's it for Max Linear. I just wanted to go over this high tide flag setup and also show you that they don't always work. They do fail, and they can fail spectacularly. So the main thing is you playing these names, you gotta be very, 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 very good with your risk management. Your loss cutting strategy has to be top notch because you gotta be as you gotta be ready to get out of these names as fast as you got into them because they can fail spectacularly. Because let's say you took this name as it cleared that $100 level, and you're not an active market participant, or you hesitated, or you had the belief that it's going to go higher or whatever. Now you're down 7%, right? You were up 20%. Now you're down 7%, right? And we all know that the way successful traders survive and then thrive eventually is by keeping their losses small and finding some sort of a methodology to allow their gains to run as long as possible. Okay, that's it. Thank you very much.